What's up, YouTube? Welcome to the Credit Plug channel, where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If you're new to our channel or if you've been checking out our content, make sure you hit that subscribe button as well as smash the like button. It helps our content reach a wider audience and we appreciate the support. So for today's video, we have another special fintech review. I'm going to be sharing some firsthand data points on a recent business credit card approval, and we're going to be covering some of the important data points you need to consider if you're looking to get approved for a high limit. So in today's video, we're going to be reviewing the Ramp Corporate Visa. So this offers an expense management platform as well as a corporate charge card. The expense management platform allows you to create unlimited virtual cards, either single use, recurring use. You can set up different expense categories. You can also plug in through your QuickBooks. So this is just another way to help better organize your business expenses. We've covered a lot of these different platforms such as Divvy, ClearCard, Torpago, as well as Brex. Now, I would say Ramp is going to be more similar to Brex in terms of their business models, the types of business customers that they're looking to acquire. Now, most of these expense management platforms are going to offer very similar functionality, but I would say Ramp and Brex are going to be at the top in terms of requirements. Whereas Divvy, for example, is going to be more open to newer businesses. Ramp and Brex are going to target more established businesses, business with higher cash flow, higher cash reserves, higher income, so on and so forth. Now, I was recently able to apply and get approved for a $53,000 monthly spend limit. Now, with Ramp, the monthly spend limits will fluctuate based on your business banking activity. So it could either increase or it could decrease based on the amount of reserves in your business checking account. Now, in order to get approved, the most important thing you want to make sure that you have is a business checking account. So Cash App, PayPal, Stripe, Square, those are not going to cut it. Now, I understand a lot of business owners use those type of accounts because they're very convenient in terms of sending out invoices or transacting with their customers online. But at the end of the day, those are not considered bank accounts. And there are some fintechs that can integrate with like your Stripe or your PayPal account, but ultimately you want to have a business bank account attached or linked to those accounts. So when the money's coming in through PayPal, Stripe, Square, Cash App, you can at least withdraw that to a business checking account that's tied to your EIN. Now, if you don't know where to begin, you can check out the North One business checking account. It's available in all 50 states. There's no minimum balance and you can get set up in as little as 5 minutes. So the Ramp Corporate Visa, there's absolutely no hard personal credit check. They're not even checking your business credit. This is exclusively looking at your cash flow. So the amount of money coming in and out of your business checking account. Now, as you've seen with a lot of the fintechs, they're going to put a bigger emphasis on cash flow versus credit when underwriting you for a credit limit. Now, one of the main reasons why is because your banking activity, your cash flow, they can get real-time access into that. Whereas with credit is backwards looking. Sometimes there's a lag when it comes to your credit because it has to update with the credit reporting agencies. So in a lot of cases, having access to banking data is going to give more granular details about your current financial situation. Now, another reason why I believe cash flow is becoming more emphasized in lending decisions versus credit is because lenders recognize that credit is not an accurate depiction of your ability to repay. Credit is backwards looking, and in a lot of cases, credit can be manipulated with trade lines and AUs. There's all different types of tactics, but one thing about banking activity, about cash flow, is that you can't really manipulate it. Either you have the money going in or you don't. So this is going to provide a lot more clarity for the lender in terms of your ability to repay. If they're able to see consistent cash flow over a certain period of time, that'll help them underwrite and approve you for higher limits. Now, there's a couple different metrics you want to consider when it comes to cash flow. You have what's called your average daily balance. So now, to calculate your average daily balance for a particular month or period, what you would basically do is take your ending balance for every day of the month, you add them all up, and then you divide them by the number of days in the month, and that'll give you your average daily balance. So ideally, you want to keep a pretty high average daily balance just to show that you have steady cash reserves in your business checking checking account. Another data point to consider is the origin of the deposit. So it's not just as simple as, transferring money from one account to another. Since it's used in artificial intelligence, it could actually look for patterns in the deposits over a certain period of time. So if it sees particular deposits from different businesses or point of sale systems or from Stripe, Square, whatever the case may be, the algorithm can actually detect those patterns and see, how often you're getting paid from these different customers, what the amounts are. So the origin of the deposits does matter. It's not as simple as just depositing a large amount of money in your checking account and then trying to apply for these different accounts, because remember, it's looking at the activity over a certain period of time. And in certain instances, it can go far back as 6 to 12 months of banking activity. You also want to keep in mind of NSF fees, so non-sufficient funds. So this is basically when your checking account goes into negative, and you never ever want that to happen, especially when you're applying for fintech types of accounts, because NSF is basically like a derogatory on your checking and banking activity. So you want to prevent that as best you can. So you don't want to have any NSF fees, non-sufficient funds, that are shown up on your banking history. Anyways, let's go jump over to the site. All right, so here I'm logged into my Ramp account now. It's just like a lot of the other expense management platforms. You have your transactions, you could create virtual cards, you can integrate the different accounting software. So if you have QuickBooks, Xero, NetSuite, it has a lot of different providers that you can connect your accounting service to. Now, when it comes to the credit limits, so I was able to get approved for a $53,900 monthly spend limit. Now, again, this can fluctuate based on the amount of money in your business checking account. Now, this is a reason why I'm a huge fan of OPM, Other People's Money, is because you want your money to sit in your bank account, and then you can use credit to run your business. And depending on what your business model is, right, if you're able to turn over this credit within a 30-day period, then it may make sense for your business. But again, like I said, you're not going to be using these types of expense management corporate cards to go purchase real estate or make long-term investments in your business. This is going to be really short-term monthly expenses, but you have a lot of businesses like caterers or anyone who might have a high turnover where they could plug money into something and money comes out. Now, Ramp does offer a lot of partner rewards, and you do have to unlock these, so these aren't going to be available immediately. So some of them include like a $2,000 cash bonus when you open up a First Republic Bank checking account. You have AWS web service, Snapchat ads. So it does come with a lot of good perks in terms of some of their partner rewards. So you could definitely check these out as well. All right, so let's recap the Ramp Visa corporate card. So again, there's absolutely no hard personal credit checks. So they're not going to be checking your personal credit. They don't even check business credit. So Dun & Bradstreet, Experian Business, Equifax Business, none of those data points are going to matter. It's looking exclusively at your business's cash flow. So in order to apply, you will need a business checking account. Cash App, PayPal, Square, Stripe, those are not going to cut it. You actually need to show activity flowing through your business checking account. Now, if you don't know where to get a good business checking account, you can get the North One Business Checking. There's no minimum deposit. It's available in all 50 states, and you can get set up in as little as 5 minutes. Now, after you have the business checking account, if you are using some of these other platforms like Stripe and Square, what you want to do is have a business checking account linked to that. So when the money is flowing through, you could just transfer it over to your business checking account. And then when you apply for some of these fintech types of cards that are looking at your banking activity, it'll already show some history right there. Another important thing is that you want to avoid having NSFs, which are non-sufficient fund marks on your banking history. That could be the easiest way to get disqualified. The Ramp application process is pretty straightforward. You can apply online. I've dropped a link in the description of the video. In my experience, the process took about 2 days to get an approval. Now, what I actually had to do after I submitted my application was take a selfie with my driver's license so that they confirm my identity. Otherwise, the process is pretty straightforward. If you apply and are approved through our referral link, you can earn a $250 Amazon gift card. Now, the Ramp corporate visa is very similar to a lot of other expense management corporate cards we've reviewed, such as Divvy, Capital on Tap, Torpago, Brex, as well as ClearCard. So if there's anyone out there who has any experience with the Ramp Visa corporate card, definitely let us know in the comment section down below. Now, I'm not 100% sure if this reports to the business credit reporting agencies. I just got approved for it several days ago, so time will tell. I'll definitely do an update video once that information becomes clear. But anyways, that's all I wanted to cover in today's video. Let me know your comments and questions in the comment section right down below. Now, if anyone's interested in applying for the Ramp Visa, we have links in the description of the video as well as pinned in the comment section. Until next time, take it easy and we'll talk to you soon. Peace.